Today's interview is with Brian Briscoe. Brian talks about how he initially wanted to be a maths professor, but then joined the Marine Corps, right? Can you get any more polar opposites than that? And is still in the military today, but is looking to transition out of that and into a full-time real estate investor. He's grown his portfolio to 250 unit, but he's done that through partnerships, and he talks about how that is. So if you're interested in any of that, stick around for all of today's great interview. As always, like and subscribe on Wrestling with Real Estate, the YouTube channel. Go to the WWRE Podcast and give me a 5-star rating and write me a review if you think it's worthy. I'm looking to talk to as many of you as possible. If you're interested in real estate, just like me, whatever aspect you're interested in, I'd love to speak with you and see if there's any way I can help you whatsoever. So there's going to be a link in the description down below, or you can go to wrestlingwithrealestate.com and sign up there. But before that, enjoy today's really, really great interview with Brian Briscoe. Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we have Brian Briscoe with us. Hey, Brian.
Hey, how's it going, Barry? Appreciate you having me on the show.
Oh, absolutely, man. It's my pleasure to have you. I'm excited about it. It's going to be a good one. I can tell already. I'm excited to get chatting. But before that, you want to give people a bit of an idea about who you are, what your background is, what you're currently up to?
Yeah. So, I mean, background. I think best place to explain who I am. I grew up in Salt Lake City. When I was 19 years old, I served a 2-year mission for my church. Went to college. And I went to college with the idea that I wanted to be a college professor, so I wanted to teach. And I was really good at math, so I just kind of put those things together. I'm like, okay, I really like teaching. I'm pretty good at it. And I really like math. So started working on I got a bachelor's in math, master's degree in math. And at one point in time, I kind of had this realization. I remember I was at a picnic. It was the math department picnic. And I was a graduate student. And so we get invited and the professors and the graduate students are all there. And I remember realizing how ridiculously socially awkward all of the professors were, and it was just like, you see them in class and they're, in front of a chalkboard in their element and they do well. But when you put them in social situations, it was just like one of those light bulb moments. And I had the realization that if I do everything that they did, I will end up being like them, and so it scared me. And I was just like, oh my gosh, I can't let that happen. So I started looking at things to kind of broaden myself, to make myself more well-rounded. I didn't want to be one of those guys that ended up with 100-pound brain and nothing else, going on. So I decided to join the Marine Corps Reserves, and that just was something that I did just because, I figured it would help me physically. It would help me develop leadership skills, help me develop myself more as a person than just being a college student or a college professor, So that was May 2001. And, fast forward, I started a PhD program in August 2001, and September 11th happened, and being a reservist and, with everything that was going on, I decided to take things into my own hands. I wasn't, every reserve unit in the nation was thinking, we're going to get called up. We're going to get called up. And I didn't want to wait. I didn't want, there's a big air of uncertainty there. When's it going to happen? Is it going to be now? Is it going to be next year? So I decided just to take control of the situation, and I volunteered for active duty. And I have been active duty ever since, essentially. So it took a couple of months to get processed and to get in, but since January 2002, I've been active duty. So in that time, a lot of my job has been based around the aviation community, but I've done some other stuff as well. So right now I work at the Pentagon. My job at the Pentagon, I'm an international relations guy. So work at the International Affairs branch. I'm a Latin American specialist, so anytime, the headquarters Marine Corps organization, overlaps with Latin America, I'm somewhere in the mix, so that's my current job. But, prior to that, like it was all aviation type stuff where, I think for most people, if you imagine, air traffic control facilities, commercial airplanes are flying around, they're always talking to somebody on the radio. We were the other end of the radio, or, if you're watching Top Gun and you hear them talking to like the control towers, we were the other end of that. That's kind of what my job was, as a combat role. But, somewhere along the way, I realized that, I needed to do more financially. Military doesn't pay as good as some other jobs, and I realized that I needed to start acquiring assets. You read Rich Dad, Poor Dad, and that really, that was another pivotal moment, was, just expanding how that book expanded my mind. So, funny thing, I remember he talks a lot about commercial real estate. He talks a lot about apartments in that book. And I remember reading the book, and this is probably 2005 time frame. I'm maybe 27, 28 years old. I remember thinking, wow, that's a great idea. I'm going to do that. But apartment sounds too difficult. I don't even know where to begin, and I had a lot of limiting beliefs around it. But what I decided to do is start buying single family homes, and, made a goal to buy a new single family home at every duty station. Sometimes it worked, sometimes it didn't. So every time I got transferred, we'd look at the market, and, it doesn't make sense to buy a home. So over the years, acquired a handful of single family homes, and, did fairly well. They appreciated, they were cash flowing, but it wasn't life-changing money. It was, really not that much, so decided that real estate was still where I wanted to be. I just needed to be able to scale faster. What was the end? So, we had accrued, 6 figures, appreciation in both of the rental houses we had. And so basically sold the houses and used the proceeds to launch a multifamily career, so, bought into coaching, have put a lot of that money into the investments that we have. Make a long story short, I know we'll talk about, a lot of this later, but, found a couple of partners, formed a company, Four Oaks Capital. And, in the last 2 years, we've closed on 250 units. It's 5 different apartment communities. And, we have another couple under contract right now. Yeah.
Very cool. Well, first and foremost, thank you for your service. I was talking to someone who was in the military yesterday, and I was saying to him, like, genuinely, I have nothing but the utmost respect to anyone who's been in the military, like the utmost respect. I sound like a broken record sometimes, but I wish I would have gone in when I was 18, to be honest. I think it would have done me the world of good. And on a completely different, I think, national service for 18-year-olds would do a world of good for a lot of people, but that's a completely different service, a different subject. But I know for a fact it would have done me a world of good at that, because I was a mess. But so I have nothing but the utmost respect to everyone who's in the military. So thank you so much for everything that you.
It's definitely had its challenges, but when I look back, that the Marine Corps has done so much for me that. It's hard to look back and imagining doing anything else right now.
Yeah. But, well, I think, and I don't know, because I've never been in the military, of course, but I think the discipline and the work ethic and the structure that you get from that builds built into your life is just serves you well in so many different aspects, right? I know that I'm sure there's maybe other stuff that's a lot more challenging, but I think those things you can carry on into your life in whatever aspect you go to, right? Real estate, you're going to be disciplined, you're going to work hard, you're going to do what needs to be done, you're going to do all that stuff. And I think that kind of teaches you all that stuff. I feel like.
Yeah. And you're absolutely right. I mean, there's a lot of discipline, but I think the thing that's helped me the most is attention to detail, right? Because, everything we do, I mean, literally when you're doing it for real, you train for combat and you make your training as realistic as possible. But, you know, the decisions you make are life and death decisions. So they teach you from day one that you need to pay attention to all of the little details. You know, they beat that into you. And, you know, you start out doing inspections where they inspect your uniform. And I mean, they go down to the most minute details to make sure that you're looking at everything, you know. And I think that's one of the things that has definitely helped most, you know, in the real estate investing career is, you know, that's something that I've been trained to do, you know, and been basically doing for the last 20 years is, you know, we pay attention to details. And I hate to say it, but, you know, sometimes we go to the extremes where, you know, if you have a piece of correspondence and, you know, you use a comma splice instead of, you know, a different, you know, if your grammar's not right, you know, they'll kick back a 20-page paper on one comma, you know. So it's, you know, that's the type of attention to detail I think some people, you know, get to, but yeah, it's definitely helped out.
Yeah, interesting. And that's so interesting that you went from, you know, thinking you were going to be a maths professor. You say math or maths? We say maths in the UK.
Math.
Oh, okay.
Yeah. So,
but anyway, to joining the Marine, like, can you get more polar opposites than that? Right? But what made you go for the Marine Corps? What made you decide that of all things? Right? You could have, you know.
Yeah, this is funny. If you know about the Marine Corps, you know, people are going to laugh. But I decided, you know, military. Part of it was I had met somebody a couple of years prior that was a military reservist, and I remember him telling stories about, you know, what they would do. But and that's kind of what piqued my interest. But you know, I didn't have 20/20 eyesight. I thought, okay, if I can't fly airplanes, there's no reason to be in the Air Force. You know, I mean, that's how little I knew about, you know, the other services. And then I looked at the Navy and I said, I don't ever want to be on a ship, you know, in the middle of nowhere. Turns out Marines go on ships all the time. I just didn't know that. And so I narrowed it down to Army and Marine Corps. And I remember telling my Marine recruiter that I don't ever want to be on a ship, so I'm not going to go with the Navy. And I'm sure he just kind of chuckled. I have been on Navy ships. They actually keep track of your sea service. I have more than a year of sea service time, you know. So in the last 20, I spent more than a year on ships, you know. But it was really the recruiters. You know, I went to the recruiters, and the Marine recruiter talked about honor and courage and commitment. He talked about all the intangible things, you know. And if you remember, you know, part of the reason I was going into the military was for you know, to help develop myself, you know, to be a better person, to be a better leader. And the Marine recruiter talked about all of that stuff. And I go next door to the Army recruiter and we'll help pay for your college degree. I'm like, I'm done. Got it. I mean, it's in the bag. I've already done that. Well, you know, and he started talking about, you know, just things that didn't matter to me. You know, we'll get you through school. I'm already through school. I'm accepted to a PhD program and they're paying for everything, you know, type stuff, you know. So really, I think it was just the recruiter that really sold it for me. But, you know, end of the day, I think that the Marine Corps, you know, we pride ourselves on being a little more disciplined and, you know, trying to do harder things in the other services. You know, I haven't spent a day in the Army, so, you know, I don't know if all the things we say is absolutely true, but we like to make other people think it is.
How was that initial training? Is it BUDS that you go through for the Marine, or is that
for us? It's called recruit training or boot camp. Okay. BUDS is getting into the SEAL program.
Okay,
but oh my gosh, my world got turned upside down. I mean, as a graduate student, I was
physically fit going in at the point, like decently physically fit, or was that
I was decently physically fit. I was a high school athlete, you know, swam and played water polo. And, you know, I was 24 when I enlisted. So, you know, 6 years removed from that, but, you know, I was still in decent shape. You know, I was still, I wasn't the best, you know, at boot camp, but, you know, physically it wasn't terribly difficult. I think mentally it was because the thing they do at boot camp is they just try to create a very extremely high stress environment and see how you handle stress. they break you down, just bit by bit, and they kind of strip you of your identity, and you're not. I was no longer Brian Briscoe, I was recruit Briscoe, and I had to refer to myself in the third person, and they basically try to undo, a lot of your learning, a lot of your habits, and then rebuild you back up. But the first couple of weeks was, extremely stressful. I went from, teaching a calculus class, to 2 days later just being, scum of the earth, so it was stressful. It really was. Physically, it wasn't that difficult, and the type of, workouts we had to do. I mean, I think the longest we ever ran there was like 3.5 miles, so that's, not too difficult, but yeah, mentally and emotionally, it was very difficult. And I think that's what it's intended. It's intended to see, when you go into a combat situation, there's a lot of stress, so like I mentioned earlier, one thing we try to do is make our training as stressful as possible and as similar to combat as possible. And, boot camp's just one of those situations where they amp up the stress levels and see how people react.
I guess also they want to test who's strong enough to survive, right? They want to get rid of the weak, right? If you're not weak to make it through that, they don't want those type of people in combat, I'm sure.
And it's more of a mental game, really. I mean, like I said, the physical stuff they have you do is not that difficult, and, comparing the boot camp workouts to, what I would do in an average day as a high school athlete, was just like, okay, what's next? But when you add that to all the mental stress they put on you and the emotional stress and everything else, it was difficult. Yeah, it was absolutely difficult.
But I'm sure that again, that helped you, right? Like going forward, like once you've been through that, you're like, okay, a lot of other stuff seems easy then compared to that, right?
It does. And it teaches you that a couple of things. I mean, your body is capable of a lot more things than you think it is. There's one point where they call it the crucible of boot camp, but it's a 3-day evolution where, over the 3 days you have like one meal, they give you what's called meal ready to eat, MRE, and you get one of them for 3 days, and you get maybe 4 hours of sleep over that 3-day period. And you start realizing that, your body can do a lot more than you think it can, and they keep on pushing you and pushing you and pushing you, and you're tired, you're hungry, you're exhausted. And, your drill instructors are yelling at you to get up and do more, and you get up and you do more. And I think once you get through the whole thing, you just realize that I am a lot more capable than I ever thought I was, and, a year after boot camp, I went to officer candidate school, which is, same type of stuff. It's just more leadership oriented than followership oriented. And it was the same process where, they push you to your limits. You may be, we call it out in the field for a week, where, same thing in a week's time. I mean, my wife, when I would come home, actually told me one time that it was scary how much I ate after a week, being gone, because, I'd probably lose 5 to 8 pounds, or more in a week, just because you go out there, you don't have a lot of food, you don't have a lot of sleep, and you're constantly moving around. I think on average would have, 90 to, depending on how much stuff you had on you, 90 to 100 pounds on your back, walking through the woods. But, yeah, that's, I think the biggest takeaway is, your mind is what quits before your body. Yeah. And it's the same thing in just about anything else. It's your mind that quits before, just like the real estate game. If you keep your mind into it and you stay focused on the objective, you'll end up being successful. People who fail because they quit.
Yeah. That's so true. You said that, because it's like a lot of this stuff isn't that hard a lot of times, right? It's not easy. I'm not saying it's easy for 1 second, right? But real estate investing, but the information is out there everywhere, right? You have people that are willing to help you, and you have courses, and you have YouTube, and you have all that stuff that's out there. But if you set your mind to it and you're able to focus believe that you can do it, right? Because that's another challenge that we have, is that limiting belief that that we can't do it, right? So it's the mind that stops us a lot of times, and it's so true in physical activity. I know this firsthand, is that your brain will quit way before that your body ever will. We have way more in the tank than we ever think that we will, and I think it's programming that brain to believe that. It's a skill in itself, I think.
Yeah, and it takes a while to break through those barriers a lot of times. Like I said, 28-year-old Brian Briscoe thought, man, apartment seems way too hard. I can't do that. That stopped me from doing it. It took me, another 10 or 12 years before I got over that and said, you know what, I think I can do apartments, So, and then once I decided to do it, I've had a lot of moments where I've kind of expanded my perspective, and it's those moments of growth that have really opened up a lot more of the world to me.
Yeah. So, because once your brain says no to something, that's it, right? But if you open yourself up and say, okay, how can I do this? Or what would it take to do this, right? Then you're open. Even if you don't achieve it, at least you open yourself up to that, and it opens the world up to a whole world of possibilities.
And I love those questions. How can I do this? Or what would it take? Instead of saying I can't, ask those two questions. What would it take for me to do this? How can I do it? And then, you're in a different mindset from the beginning, So there you go.
Someone told me another good one as well. Not just how can I do it, who do I need to know to do this, right? Because that's a lot of it. It's people. It's not necessarily, it doesn't always fall on us. It's creating those relationships, knowing people that can help us do it. And I like that. I was like, who do I need to know to be able to do it?
And I've had some amazing mentors. Some were paid mentors, and some were very informal mentors. That have helped me along the way. And who if you can just find that one person that can unlock your brain, or that can just give you the little push, a little word of encouragement at the right time. I mean, that's huge, or, maybe you're really, really good at analyzing deals and talking with brokers, but you just need somebody to help you raise money or something like that. Who do I need to be able to do apartments? Well, I'm good at X. I really need somebody else who's good at Y, and you go out and you find that person, and, magic happens.
Yeah, so true. So you say you built a small portfolio of single family homes. I'm guessing they were all through getting owner occupied or FHA type loans, buying it with that. And was it Rich Dad Poor Dad that made you think about apartments and going that route, or was it something else that kind of triggered that for you think?
Oh, it was something else. I mean, with Rich Dad Poor Dad, I had completely dismissed apartments, and I said I can do single family, but 2016, I was on a deployment, and this was 7 straight months on a ship. And, I got off the ship. I was probably off of the ship for, maybe a sum total of 20 days in that 7 months. But it was right about the time where I realized that my Marine Corps career was coming to an end, or it could come to an end. I mean, I can serve longer if I want to, but, I decided I was going to get out at my 20-year mark. But so rewind 3 years ago, I started coming to the realization that, I was stationed at Camp Pendleton in Southern California. And I realized that, okay, me thinking in 2016, 2017, a year from now, I'm going to move somewhere, and, the Marine Corps gives people 3-year orders. And I realized that I had one more move before I'd be eligible to retire. So I started thinking, okay, what do I want to do? And the end game was always something real estate. I just didn't know what that real estate was, So, when I got on the ship, I loaded my Kindle up with as many books as I could on the real estate subject. And I just tore through them, and they were all single family books. And every time we'd go ashore and have Wi-Fi, I would go to Amazon bookstore and just start downloading books, and I'd read as many books as I could. I think I accidentally downloaded a Bigger Pockets book on apartments. It's like how we bought a 24-unit apartment complex with little or no money down, or something like that is the title. Brandon Turner, bearded Brandon, whatever. But so I read that book, and it was a super short book, really easy read, but it just started making me think a little differently, and a couple of things that attracted me was, scale. I can buy a 24 unit apartment building with 24 tenants and 24, oh my gosh, I don't have to buy a single family house and go through the same process 24 times. You do one close, you do one loan, you do one everything, and you have one roof, not 24. You have one yard or one lawn to take care of. But, and I started realizing that the smaller multifamily was accessible to me, I knew I had about $250,000 in equity at the time in the single family houses. And I started thinking, with that $250,000, I could probably buy something between $500,000 and $1 million, and it was accessible, and that was it. And I'm just like, okay, I'm going to start looking at 5-plexes or 8-plexes or whatever. So really the light went on when I was looking to be able to push my real estate further, so I was trying to learn as much as I could, and I was trying to be able to, ramp up to where I'd start buying more houses. And at the time it was single family. I was looking at fix and flips. I was looking at, the subject to the lease options, many different methods to make single family scale faster, and happened upon a book that all of a sudden multifamily was accessible, and that changed everything.
Wow, that's interesting. Yeah, because so many people get into real estate, but they don't I was the same way. I didn't think that multifamily and apartments was an option, right? Because you see these big apartment complexes and you realize someone's buying them, but you just assume they're just huge giant companies. You don't realize that there's people like us putting syndications together and buying them. I think once I found that out, I was like, wow, that's
or you think it's like the ultra wealthy Donald Trumps of the world, right, and that are buying that real estate. And I mean, they own a lot of real estate, but like I said, that's what really, in my mind, made real estate accessible. And slowly my mind expanded from, I can buy a 5-unit to I can buy a 20-unit to I can buy a, right now the sky's the limit. I know what it takes to get bigger and bigger properties. Our first acquisition was 55 units, $4 million deal. So, and that was a stretch for me to be able to say, yes, I can do it, and it was, writing offer letters, when you're offering, millions of dollars, the first time I did that was a stretch, so, it took me a long time to get there, but it was just very slowly, expanding my mind. And now that I've realized that my mind was a process, I recognize it a lot more. I recognize when I have a limiting belief. I recognize when, something in my mindset is off. And then I can just say, no, that's, I need to unlock that. I need to get over that. So anyway, for most of my adult life, I had a ton of limiting beliefs. I just didn't realize that they were there.
Yeah. Yeah, that's interesting. I think real estate for me as well has opened the world of mindset stuff. I kind of had it there and understood kind of, but when because it's such a huge component of being a successful real estate investor, right? And you hear it all the time, and you've got to improve yourself almost more than your knowledge of real estate, right? Because unless you put yourself and make yourself into a person that's able to do all this, right? You can have all the knowledge in the world, but you'll never take action. You'll never do the right things to be successful. So through that, I realized, similar to you, I kind of didn't realize I had so many limiting beliefs. And through real estate, and I thank real estate for that, I've been able to improve myself as a person, that self-improvement, reading books and listening to podcasts and talking to people about it. And once you're able to identify some of those negative behaviors and those negative thoughts or whatever it is, it's so much easier to kind of change them and improve on them and change them, right? You can change your behaviors and you can change your thoughts a lot of times just by working on that. That's really interesting to me. So was your first investment that 55 unit in the multifamily space? Was that your first?
Yeah, that was my first one. I mean, I had just enough money to be dating. And at that time we had only sold one of the 2 houses, so I had limited capital. I thought about investing passively in somebody else's deal, and there's a lot to be gained by investing passively, but I think I had right around $100,000, and so the options before me were invest passively with, this group over here, and there were a couple of syndicators who live, really close to me that had kind of taken me under their wing. kind of informal mentorship. And they had told me that, hey, look, if you want to invest with us, we'll try our best to show you the ropes and help you out and help you with your career. But end of the day, I decided to go with a paid for mentorship program, and that, so with limited capital, that's what I did. I took part of it, did the paid for mentorship program. And then I realized I needed to be as attractive of a team member as possible. So I put all the other money, the rest of that money in the bank, because when you buy an apartment complex, you have to have earnest money deposit, and that's like 1% of your purchase price in most areas. So I realized that I was going to have, a lump sum of money, or I'd be more attractive as a partner to other people if I could pay for the earnest money. If I could, provide some of the liquidity that the banks need you to have before investing, or if I could supply some of that skin in the game that you need to be able to get the loans. So instead of investing passively, I kept it aside for our deals. And a couple months later, we got that 55 unit under contract, and I wrote a $40,000 check for that earnest money deposit and sent it off. And a couple months later, I wrote another check for, I don't remember what our extension fee was, but I had to do the extension fee too. So it's just one of those where, that was our first. It was the first deal we did. It was a stretch, and we knew it was a stretch, but it was also where we brought our team together and formed the company that we have right now. So when that deal came about and we got it under contract, it was basically 4 guys who had independently come together to work on one deal. And I mean, it's kind of comical at the time, but we each one of us had our own LLC, and we all had our own logos, and the offer letter that we gave to the broker, was like Four Oaks, not Four Oaks, that's our current company. I was Streamline Capital, and we had like Third Avenue Capital and Golden Mile. And, we had 4 different logos on the paperwork, it's just like, we're all coming together to buy this. But, working through with the 3 other guys that, to put that deal together, I realized that, we had a dream team. It was like, I'm an old jazz fan. It was like, the Michael Jordan and the Scottie Pippen and the Karl Malone and the John Stockton and Magic Johnson, all on that was it 1992 basketball team, whatever it was. But that's what I felt we had. But that brought us together, and we worked together well. We had the same goals. We had the same outlooks. Everything synced. It was almost like it was, a gift from heaven. Is like, here you go, Brian, all that work you put in, is now paying off. Here's 3 partners for you that, so almost magical in a sense. But after 3 or 4 months, we decided to, work exclusively together. We formed Four Oaks Capital, and we've had a fair amount of success, and, right now the sky's the limit.
That's cool. So first of all, that was really smart of you, I think, to figure that out, right? Well, how can I be of value to this people? People, I'm sure all the time wonder, like, how can they be a part of the team if they don't have any experience and they haven't brought it? But there's a number of different ways, right? There's not just one. There's tons of different ways that you can bring value. One definitely is that you need that money up front.
Capital.
Right? Yeah, up front, because it's, until you close, a lot of times you haven't raised that money, and you need money to be able, like you said, that earnest deposit. You need stuff for inspections. You need stuff for all kinds of due diligence stuff as well. So that was really smart of you to do that. So I think anyone who's looking, any team can always do a little bit of capital, right?
Yeah.
There's never going to be something that is short. But then how did you meet the 3 members? And you said that you guys had good synergy. You guys had a similar outlook. You guys kind of fit well together. Mm-hmm. How did you meet the other 3 members of the team?
From the beginning, I realized at one point, that there was a point where I realized to go big, I had to find partners, and from that point on, I was always looking for potential partners, so I was involved in, a lot of different forums, where people were interested in multifamily investing. And in one particular forum, we the forum was kind of like a compare your underwriting notes. I know you go to like a weekly underwriting thing, but it was similar. It was a group where people came together to compare their deal analysis and how they analyze deals. And one of my current partners said, "Hey guys, I want you guys to look at my underwriting of this deal." And I opened up the spreadsheet and I looked at that, and I'm a math guy, remember? Okay. So me, numbers is like the Matrix. Have you ever seen that movie where, Keanu Reeves looks into the numbers and he sees shapes? That's kind of how my mind works. I looked at the numbers and I'm like, those numbers are familiar. I know these numbers, and I opened up a spreadsheet I had on my desktop and we were looking at the same deal, and so I picked up the phone and I called him. I'm like, dude, I mean, we had talked a handful of times prior to, like, hey, Eric, I just got to say this, we are looking at the same property. And we started talking, and, we were both interested in the Carolinas. This property was in Columbia. And we started talking, okay, well, what brokers are you working with? Okay. I'm working with them too. Oh, wow. Yeah. I've talked to him too. Oh my goodness. We were talking with the same brokers, and we started talking about the other deals that we had looked at, in the past couple of months. And we realized that we were inadvertently competing on everything we did. I'd put a couple offer letters in, and I mean, looking back at it, I didn't have any semblance of a team whatsoever. And I was putting offers in, which is kind of scary, to be honest with you. But at one point in the conversation, Eric said, "Hey, Brian, I mean, this isn't the first time we've talked. I think you're really smart. Why don't we collaborate?" And I was just like, you know what? Why don't we collaborate? And it was funny because I was looking for partners. At first, the idea of collaborating with Eric, it just wasn't even in my mind, because I kind of had once again, a limiting belief. I thought that, okay, I'm a deal finder. I need to find a capital raiser, and Eric wasn't a capital raiser. He was also a deal finder. So, me being a deal finder, working with another deal finder, I never really looked at him and said, I want to be your partner. But when he said, let's collaborate, I just started thinking, we're competing already. That makes sense. It absolutely makes sense. And so, we started collaborating. We started talking about, he'd get a deal to underwrite from a broker, and, I might get a deal from a different broker. And every time we had something, we started working together on it, and that was the beginning for me. Now he had already partnered with Brian Mallon. They had been longtime friends and had already agreed to start working a apartment business together. So when I agreed to, and that was in on the first conversation, Eric was like, "Oh, by the way, I'm already partnered with Brian. So if you agree to partner with me, you're agreeing to partner with him too." And I agreed to it. So we started, like I said, a bunch of independent, three of us, trying to, find deals and get them under contract. And when we finally got the 55 unit under contract, we kind of looked at everything that was involved. We realized that we were going to have to raise, $1.5 to $2 million. And we all sat down and said, okay, how much do you think you can bring to the table? And we ended up being short of the number we had to raise. So Eric said, "Hey, I know a guy," and he introduced us to Todd Butler. So that's how we all came together on the first deal. It was, we were all participating in forums. We were all interacting. We were all trying to help each other out. And when we realized that we were all, looking in the same area, or the two of us were looking in the same areas, it just made sense.
Yeah. So, and then obviously, so I'm sure there was an element of luck in terms of not the fact and you can partner with anyone, right? But the fact that partnering with these guys and you guys clicked, like, could have worked together, and it could have been not so good, right? Or maybe not even bad, but not the perfect fit, right? But it seems like you said that it's a great fit, right? You guys work great together, so it's kind of an element of luck, I suppose, with that.
Yeah. I mean, that part, I guess, usually I say luck is just really hard work in disguise, but we had both been putting a lot of effort out in there, and I had talked with a lot of people. Part of it's a numbers game, part of it's just a not quit thing. But I mean, looking back at it, I'm a fairly religious guy. Like I said earlier, I felt like it was God handing me something, and saying, hey, for all the efforts and all the, all the faith you've had in your background, I'm giving this to you, some type stuff. But yeah, I mean, it was, like I said, it was amazing that it all came together like it did.
Yeah. But also, I feel bad using the word luck. It wasn't that I was diminishing what you achieved or anything like that.
No. I mean,
luck. I think luck is also, what's the saying? Where hard work meets opportunity, right?
Yes.
You create your own luck as well to some extent. Like you said, you were in these forums. You were open to partnering. You were open to looking at deals. You were open to improving yourself, into growing, into all those stuff, right? Had you not had any of those things, you wouldn't have had that.
But I mean, the way you use the word luck, it did make me think, because I never really thought, I mean, that the fact that we were, we came together and partnered on one deal, that's attributed a lot of hard work. But, the fact that we all four of us have the same outlook, that doesn't happen very often, So, yeah, I mean, if anything was lucky, that could have been a little ounce of luck there. Everything else, me talking to, dozens of different people about potential partnerships, eventually I found the one that everything aligned with. So, but yeah, it is, coincidental, or
Don't use the word. Yeah, look.
Yeah.
Diminishes what you achieved. So I apologize for that.
No worries. I never heard that word. Nobody ever put it to me that way about lucky, that we all, had the same mindset and everything else. Usually when people use the word luck, but yeah, I guess that's actually a way of putting it. Yeah.
But so what are your roles like? Because obviously you mentioned there, right? You don't want a team full of deal finders. You don't want a team full of underwriters. You don't want a team full of capital raisers, right? Everyone needs to somewhat have their role, and the roles can overlap, and you can have two people doing the same. But what did you find that worked best for you guys in terms of roles, in terms of what everyone did in the team?
So our roles have shifted over the course of the 2 years we've been together. When it started out, I put the first deal under contract. Eric and I were both looking for deals, both analyzing deals. Excuse me. And just so happened that the one that I found, was the first one we put under contract. Right. So, and to be honest with you, I wanted to be the deal finder. That's fun. It's exciting, writing offer letters and, playing that game is fun. But yeah, once we started talking about company and long-term, Eric called me privately. It wasn't a company decision. He's like, hey, Brian, just want you to know that I think I should be the acquisitions guy. And part of me was like, no, you're not taking that. That's what I want to do. And the way he explained things, he's a medical device salesman. All right. He lives in Wilmington, North Carolina, and he travels all over the North Carolina for his day job, so he's got basically a travel budget, and he makes his own schedule. And he just said, it makes more sense for me. And honestly, our skills overlap a ton on this aspect. He's very gifted at his analysis, and I've got a math background, so I could do it very well also. But so when you looked at everything, he explained it like this. He's like, look, I control my schedule a lot more than you do, and my company will pay me to go to Greenville, and I have a couple meetings with Dr. X and Dr. Y, and in the afternoon I meet with a broker and I walk a property. It's like it falls a lot more. It aligns better with my current role, and I work at the Pentagon. I don't have that flexibility, and so when he put it in terms like that, I had to swallow my pride and just say, you're right. No argument. You're right. So he ended up being our acquisitions guy. He's been our acquisitions guy ever since. And on the first properties that we closed on, I had done the bulk of the underwriting, the bulk of the due diligence and everything else, and carried it to close. And so my first role was asset manager. And as we started getting bigger and bigger, my time at the Pentagon is, I don't control my time as much as you need to be a good asset manager. So right around the time we had property number 4 under contract, we started realizing that we needed somebody with more flexibility to play that role. So, Todd Butler ended up being the asset manager. Brian Mallon's been doing our website. The website's amazing, by the way. He does all of our pitch decks. He does, our investor portal. He does a lot of the stuff that, if there's anything we do, like my virtual background, that's one thing that he does. If there's anything that looks sexy, you can just say it was Brian that did it. And right now I'm kind of the educator. I'm the teacher, which is the role I wanted to be, 25 years ago. I wanted to be a teacher. So, we're developing an educational course, and that's my baby. We have this podcast that is designed to teach people how to syndicate, and that's my baby. So, my job is, content and education is what I'm creating. And through that content and education, I'm bringing people who want to invest to the table, capital to deals. I'm also attracting new partners, so this, through the podcast, you meet a ton of people, and a couple of people who have been on the podcast are actually partnering with us on a larger deal right now. So it's, that's my role right now. Long story short, we've changed a lot. Our roles have kind of morphed. We've kind of settled in to, I think, where we're going to be steady state, long term. We'll all have very similar roles to what we're doing right now.
Yeah. And that makes sense. I'm sure, there's a settling in process, right? From when you first start, you think this is what I'm good at, this is what it'll look like. But I'm sure, like you explained, it just kind of changes, and you kind of find your spot, right? That works for you in the team, and that works for everyone. So that's cool to hear. What you said, you guys have 250 units, right, over 5 properties. Do you guys have a business model and a kind of property type that you like, or are you kind of a little bit?
Yeah. So there's a couple of things that we're doing. Number one part of the business model and our bread and butter is we're looking for C class and sometimes B class, C or B class, value add properties. We like areas that are experiencing high growth, but we also like to stay away from the major metros. The major metros tend to have a lot more competition. Competition drives up prices and makes the investor returns go down. So, we're looking upstate South Carolina, Augusta, Georgia, Piedmont in North Carolina. So, those are the areas we're looking in. So secondary markets that are in the Southeast that are, growing and expected to grow. And we're looking for C-class assets that we can force some appreciation. So that's kind of the bread and butter. We have a couple of other things that we're working on that are complementary. We had a couple of high net worth investors that have approached us and said, hey, I like you guys. I like what you're doing. I like apartments. I want a bigger piece of the pie. So right now we've got 2 deals under contract through what we call our cash flow concierge program, where we're essentially catering to that demographic of, higher net worth people that just want to own something. So, we're underwriting, we're analyzing, and, presenting to these guys and say, is this the one you want? And so we've got 2 under contract that fall under that model right now. And then, the education piece is, I think, the third part of our business plan, where, don't remember if this was before we started recording or not, but investment through education, we're coming up with an educational platform where with anybody who invests passively with us is going to have access to a treasure trove of information about how to become a syndicator themselves. Right. So, and in the future, the hope is that, when these people, they invest with us, they get access to the information, they get access to us and all the things that we, the information, the platform that we're developing, that when they come with their deals and they need people to partner with, that they're going to look to us to partner. So that's really the business model. It's all based around, apartment investing, just, from a couple different angles.
Yeah, interesting. Yeah. I like the educational side of it because it brings in people, right, that want to learn then, right? You attract those people that want to learn and hopefully find investors from that.
Yeah.
Cool. Well, I'm sure you're going to have a lot more growth from here, right? You guys are just kind of getting started, it seems like, and you've got to 250 units already, which is awesome. So
yeah, and I hate to say it, but if it weren't for COVID, it'd be a little higher, but we're happy where we're at right now. We're a little bit behind the goals we made in January 1st, but I mean, we've closed on 160 this year, and we're going to probably close on at least that many more.
Yeah. That's still not
too December, bad. Yeah.
160 units in a year is not too bad either.
Yeah.
But yeah, I get where you're coming from.
Yeah.
Cool. Well, this show is called Wrestling with Real Estate, right? And I like to incorporate some wrestling related real estate questions, just to try and catch people out, but not really. It's the first one that gets people usually. So the first one is, what would your wrestling name be? If you picked a wrestling name for yourself, what would it be?
So I had a colonel that I worked for a while that always called me Disco Briscoe. So that's probably it. And I mean, just because it rhymes. I mean, I've never been much of a disco type person myself, but hey, let's go with something that rhymes, right?
Disco Briscoe, I like that. Yeah. So every wrestler has a special move, right, or a signature move that once they hit, it's game over, right? It's lights out. So what would your special move be in real estate, you think? What is your strength?
I would say the education piece, and if you had to put a name to it, this doesn't sound like a wrestling move, but education through investment. I mean, that's the platform we're building. And, I think I'm good at teaching, and it's just something that I love doing.
Cool. Yeah. And then, in a wrestling match, when you get body slammed, it hurts a lot. So what's been your biggest body slam you've taken in your investing career?
A phone call from an attorney, and he's our SEC attorney, and he was at a real estate conference with our broker, the lending broker, so the one that does our loan for us. Lots of different brokers in the business, but he called me up. He's like, "Hey, I just talked to Brandy, and she's going to call you soon, but she's busy right now. I just want to give you a heads up. Your loan proceeds got cut by a lot, and I'm like, how much? We were 2 weeks away from closing. This was, September last year. Fannie Mae had come up to its legal cap of how much money they could lend in a given year. And in order to reduce the lending they had for the rest of the year, our rate, basically, we were looking at a 3.6% interest rate, and they raised it to a 5.1 in a very short period of time. And so, the deal we had under contract, we basically lost $600,000 in loan proceeds overnight. And when he called me and told me that, it felt like I got body slammed. I mean, I had that sick to my stomach feeling that was just like, oh my gosh, what are we going to do? We ended up making it work, though. I mean, we ended up getting some of that money back in proceeds and closing on the property.
But did you have to then go ahead and raise some more money?
Yeah, we had to raise a little bit more money. Fortunately, like I said, I had not invested passively with my wad of cash, and I was able to pull, 30, 40,000 more into the deal that I hadn't anticipated putting in. My partners all had a little bit of money that they had kind of reserved for the next deal or the deal after that they tapped into. Collectively, our partnership, I think, ended up putting $400,000 to $500,000 in that property. Most of it was after that moment. We did bring a couple more investors in after that. After that moment, I mean, we ended up losing a total of about $400,000 in total proceeds. Rates came back down a little bit, and, we were able to negotiate a couple points on things, but end of the day, yeah, we ended up raising, in addition to our money, another probably $400,000 that we hadn't planned on.
Oh, wow.
Yeah, 300,000. I don't remember.
Well, you guys made it work, right? That was the main thing, right?
Yeah. And we also moved the needle on the GP-LP split. That's what really made the deal work. We had gone in with a 75-25, 75 LP split, 25 GP. And in order to make it work, we ended up making that a 90-10. So that was the other part that made it work. We raised more money, and because we diluted the returns, we moved from a 75-25 to a 90-10.
Interesting. Yeah. So was there a moment that you were standing on the top rope getting ready to jump, but you were too scared? What was it, and how did you overcome it?
Wow. It's happened so many times. I would say the first offer, putting in an offer for a property more than $1 million, and underwriting, getting a deal, offering memorandum and underwriting it, and, looking at paper and saying the most I'll pay for this property is, 3.1 million or whatever. That's easy to do, but actually calling a broker and submitting an offer letter, that's tough. It just took me a while to just say, hey, look, I've got to do this. I've got to do this. And, part of it up front, I think, was a lack of confidence, but, I just kept on, I had bought into a mentorship program. I had a lot of people who were there to support me. And I just realized that, it's really not that big of a risk. I was afraid for, I was more afraid of rejection than anything else. I was afraid that I wasn't going to be able to do it more than anything else. But, once I realized the risk was actually very low, here's how it works. You put in a non-binding offer letter, okay? Not binding. And then if you get that offer letter signed, you go through a contract, and you get a contract signed, and you usually have a 30-day contingency period to do due diligence. So you're actually putting almost a zero risk on the table by putting that offer letter in, and I didn't realize that at the time, but the first time I wrote an offer letter, was substantial, and it took me a while to hit the send button.
Yeah, it's just like crazy when if you've invested a little bit in single family. I was the same way, and then all of a sudden, you're making an offer that's over $1 million, right? Well, for whatever reason, that $1 million thing just kind of, for me anyway, it freaked me out. Right? I was like, who am I to be buying a property that's over $1 million, and all that kind of stuff? And it's just
adding a zero. Just wherever you are right now. Add a zero to the end, and that's what it was like. So we have a property under contract that's 7.1 million. Is the purchase price. Put a zero on the end of that, and that would make me nervous right now. But putting an offer out on a $71 million property is a whole different ballgame. So, yeah.
Cool. Well, Brian, this has been fun, man. This has been a lot of good stuff shared. It's been really interesting. Thanks for sharing your background and kind of, being in the Marine Corps, what it kind of taught you and lessons learned, and kind of, how it kind of seems to have helped you in a lot of ways. And then, getting into multifamily and kind of the way you did that with partnering and finding good team members, and kind of making everything work from there. It's been a really interesting story. And, like I said earlier, I think this is just the tip of the iceberg for you guys, right? You guys are just got to keep growing and growing from here. So I think that's really cool as well. So, but before we go, before we end this interview, can we share with everyone where they can find out more about you, where they can find out more about your company, what kind of the educational piece, whatever you guys have to offer?
So the website's fouroakscapital.com, all spelled out. That's probably the best place. The podcast is called A Diary of an Apartment Investor, and that website is diaryofanapartmentinvestor.com. Those are probably the two best places to learn more about us. LinkedIn is by far the easiest place to get a hold of me. Just find me on LinkedIn, send me a message, and I'll respond to that pretty quick and easy.
Cool. And the thing is called Educate to Invest.
Education through investment. Yeah, that's, we're going to put that on Mighty Networks. It's a work in progress right now. We've got most of the material scripted out, and in the next month or so, I'll be shooting a lot of videos so we can have, written content, we can have video content, and we can turn it into audio content as well. But that information is all going to live on the Four Oaks Capital webpage.
Cool. Well, thank you so much, Brian. It's been a pleasure talking to you and getting to know you and hearing your story, man. I really appreciate it.
Yeah. Same to you. I appreciate your time.
Hey guys, thank you for listening to today's episode. I really appreciate each and every one of you for listening to the show. I have a lot of fun doing these shows, so I appreciate you guys listening, and I hope you guys enjoy it as much as I do. As always, will you please like and subscribe on Wrestling with Real Estate? It really helps me grow this channel and get better guests. And also, more importantly, if you can go on the podcast and give me a 5-star rating and write me a great review. People really look at that when they look at the show and they consider being a guest. So the more I can grow the show, the better I guess I can get on the show, and the more quality I can provide for you guys. So I would really, really appreciate it. And I've set a goal of reaching 100 5-star ratings and 100 great reviews. So if you guys can go on there, it would take you maybe 5 minutes total. I would really appreciate that. And then if you've done, reach out to me so I can thank you personally for doing that. But yeah, again, thank you for sticking around for the show, and thank you for being a listener to my show. I really appreciate each and every one of you.